And that sound means we are now live here on our YouTube channel. It is Friday, 10/30, 2020, the day before Halloween. And the market's got some tricks and some treats for us here today, Frank. I'll tell you that. A lot going on out there. Welcome, welcome, welcome. We've got a full crew here today. Going to be a fun show. We're going to break all the action down. Markets are down again here after a batch of tech earnings that, quite frankly, were really, really strong, but just didn't get gobbled up, didn't get bought up. We didn't see the market momentum running on it. We'll break all those numbers down when we get into the individual stock talks. We're going to go through every index we have, the major commodities. We're going to look at all the currencies, top-down analysis style, the way that we always do it here in the halftime report, give you guys a thorough look. I mean, it's the last trading day of the week. There are still 2 more trading days before we have some results about a presidential election on Tuesday evening. Monday and Tuesday, obviously, are still going to be open and live and running, but we'll talk about things that we're doing to position ourselves going into the weekend as well as next week and what to expect. Welcome out, everybody. I got an exciting show for you. If you're popping in the show right now and you're a veteran of our community, you know what to do. You know the drill. Hashtag Team Tackle. And if you're brand new, you can be on that team pretty easy. Just pop in hashtag Team Tackle as well and come and join us on a daily basis. And give me that thumbs up. Let's get the analytics. Let's get the word out there today. There's a lot of people that could really use good market insight analysis right now. No question about it. So let's get the word out. I've got Coach Frank Martin, as always. Friday Frank Day. How you doing today, sir?
Hey, I'm doing well. We've almost made it through earnings season. So while I'm going to complain a little bit, I know that next week I can stop complaining. And actually, I'm not complaining that much. That now that we're at the end, but doing well. It's a messy market. There's no doubt about that. And I'll be looking very much forward to getting all this newsy stuff behind us. That's for sure.
You hate this time of year, for trading wise, obviously. And just because of the earnings season, all that kind of stuff. You told me something a minute ago. You're like, listen, if I wasn't on Twitter every day and working with Tackle as a coach and helping students, I would probably be on vacation for the last couple of weeks because this is not your type of season, is it, Frank?
No, it's not, and when I wasn't with Team Tackle, I would, about the seventh, about Alcoa time, right? Because Alcoa used to kind of be the, kickoff, if you will. It usually happens around the 7th, 8th of the month. Until the end of the month, I would usually just go play some video games, go fishing if it was summertime. I'm not opposed to sticking my head in the sand and letting earnings season pass me by. So I hate news-driven markets as a directional trader, as a technically focused trader. It drives me absolutely insane. I accept it, but it still drives me nuts, right?
Yeah. Well, and this market here in 2020 has been one of the most news driven in that regard. And even, Matt and I were talking on the phone earlier today, and it's been theme based. It's really been driving one theme or the other, depending on the season. We had different themes in April and May, Matt, than we do today. But it's been a very unique 2020 in that regard.
I was thinking last night about the vacuum in the market and that black hole that the election is creating that just sucks up every potential theme that drives the market right now. And I was thinking about these themes that, we've discussed in the marketplace, the pandemic theme, that initial one, the economy reopening up theme, the stimulus theme. Those are just 3 of the major themes this year. But, there's been these micro themes that have developed as well. And so, there is a little bit of a vacuum right now where the market is looking at the scenarios right now. And they're like, okay, COVID, vaccine, election coming up in 4 days from now, uncertainty over the economy in general around the world with what's happening in Germany and France and some of the other European states, doing some aggressive lockdowns. And does that represent something for us, moving into January or February of this year? Are we going to be looking at further lockdowns? There's this uncertainty that's building. And over the course of the last week and a half, as we've kind of moved away from stimulus discussions, there hasn't been anything to capture the market's attention. And that's why I refer to the election as this black hole, where it's just sucking everything and stopping the market from embracing something from the buy side. And it becomes very difficult as a trader or as an investor right now, looking at the technical condition, looking at the uncertainty that election has represented over the last week. It's very difficult to map something out longer than a day. It just is. And so, Mark said on Monday, he's like, yeah, this is a day trading week for me. And I said on Tuesday, yeah, this is kind of a throwaway, swing trading week to a certain extent, because there really hasn't been anything that to capture the market's attention. Think about it like this, guys. Over the last week, you've had extremely good beats in earnings numbers, extremely good. The average EPS beat this quarter is going to rival record quarters in market history, guys. That's how good the beats have been across the board. Look at it today, and I'll do a deeper dive on earnings later on today. But Amazon, let me just give you some headline numbers here, guys. Amazon, $12.37 a share. Expectation was $7.30. That is utter destruction in EPS numbers. That is utter destruction from a profitability perspective at Amazon. You could not ask for a better beat on EPS. Even the most staunch bull in Amazon, and by the way, that I don't believe that's Jeff Bezos, but even the most staunch bull in Amazon would just dream about these numbers. And the most staunch bear in Amazon would hate these numbers. And yet, what is Amazon doing today? Boom, boom, boom. Sell off, sell off, sell off. Facebook today, $2.71. Expectation $1.94. An even better beat on EPS numbers with Facebook. And what's Facebook doing today? Down, 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 down. When you look at Apple today, now, out of all the earnings roundup today, the one that does make sense to me is Apple now. They do. They missed iPhone sales. They beat, but they only beat at 73 cents versus the 69 cents. I'm sorry, Apple, we know what you do. You discount every earnings for 20 consecutive years. We know what you do. You need to show us. Apple didn't show us. Apple also missed on iPhone sales, in large part due to the release of the new iPhone that just came out recently, but we still had some misses and we didn't have healthy beats. I understand Apple's, but when I look at this collectively, and I look at all the positive earnings over the course of the last week and a half, and I see the EPS beats we've seen just this week, and I've seen the EPS beats today, this market is lacking that theme. It's been so dominant. How long did we talk about stimulus, guys? How long did we talk about economy reopening? How long and how much percentage of content at Tackle? And I would say Tackle's far better in percentage of content and actually getting to real content and just hypothetical, bullet point type content. And Tackle was dominant over those things, the same way everybody in the market was. But right now, everybody's talking about uncertainty here, uncertainty there, uncertainty here regarding COVID, regarding economy reopening up, regarding election. And I really do believe that this election has captured the national attention so much, and we're so tight against that. And that's why I refer to it as that black hole, because it is just sucking up the lifeblood of everything in the marketplace right now. Nobody, and not just market participants, but nobody in the US can focus on anything other than what's CNN saying about polls, what's Fox News saying about polls, what's, all these political and news media organizations. And so that's the dominant reality in the market. And everything that could be a positive is just being sucked up by that election uncertainty and what that represents to stimulus moving forward between the election on next Tuesday and when we do get that, the president-elect, when they do become president. We have an entire over 2 month stretch where you're gonna have potential of a Senate that is not going to be the Senate moving forward in the future, a president that's not going to be the president moving forward, or all these different scenarios of the Senate being this and the president being this. There's just so much uncertainty. And if it wasn't for 16, guys, there wouldn't be that uncertainty. If it wasn't for the massive polling miss in 16, there would not be that uncertainty right now. And yet there was. You can't discount that. And that is an overriding theme right now, which is represented even more degree of uncertainty towards what's going to happen on Tuesday of next week. So it's just, I truly do believe that the market is more theme-based right now than it ever has been in my career. Now, maybe we saw themes develop in the 80s that I am not aware of, and maybe we saw themes develop in the 90s that I was not aware of. Maybe that happened, and I'm sure it did, right? Human nature doesn't change very often. It doesn't. We really don't evolve that much. And so in terms of that, but I've never seen a market that position traded themes the way we have in 2020. It has become so, become so important to the psychology of the market that when you now remove any theme from the market, you can call it causality, causation, you can call it correlation, whatever you want to call it. But when you remove that, honestly, market participants look at this scenario right now, they're like, well, what are we going to look at? Fundamental data?
Mm-hmm. Yeah, it leaves that black hole like you're talking about next Tuesday, man. I think that's exactly what everybody is kind of fixated on right now until we get resolution to that. The market's going to be in limbo. I mean, young Jake, come on in here for a second if you can there, young man. It's great to see you as always. Thanks for joining the halftime show and whatnot.
Glad to be here.
Absolutely. Yeah. In fact, Jake, in pre-production, when you and I were chatting on it, I was asking you about kind of your perspective on markets right now. And you were saying some of the stuff Matt's talking about. Basically, I've been listening to the halftime report, been listening to Matt, and it's like, okay, this election thing, and everybody's fixated on it right now, Jake. I mean, how are you approaching markets and what are you seeing out there?
Well, I'm day trading. So I have a few longer term strangles on. Short that because there's an increased volatility right now, so I don't mind just playing neutral on the market, try to sell volatility, but again, low percentage of the account. The rest of it's just doing some short-term day trading, little swings. I caught the earlier down move early in the day, sold like 32.70 on the ES, bought it back close to the lows. I got the second upward move. I mean, it's just a lot of short-term stuff. I'm not committed to anything right now except my long-term accounts, and those I'm hedging with futures market. So I'm not trying to take any stance this way or that. And my opinion is that we won't really have any solid footing or foundation until we have some stimulus conversations over with. And I don't think that's going to happen in best case scenario until December, and worst case scenario next year. My fear right now is the fact that if the election is too contested, it's too close, and we all get distracted with a lot of BS and everybody says this or that, and we don't even start the conversation until December, and then vacation happens, it's like we might not get anything until next year. And if that's the case, I don't know how the market's going to react. So it's going to be interesting times, to say the least.
The one thing that concerns me the most in all of this is the contested election, and in part due to what Jake is talking about. It's a contested election will capture the social conscious, not just of America, but the entire world. And nobody will talk about anything else until the Supreme Court actually decides. And so can a lame duck Congress get something done in a contested election scenario? Now, the one thing I'll say to that, Jake, and because that would create a void in the market, no doubt about that. That is a potential worst case scenario. Contested election, lack of stimulus, market is already in sell mode. That is I don't want to say it's a nightmare scenario, but that is a bearish thesis. There's no doubt about that. Now, one thing that can offset that void is the central bank. And guys, the central bank has been extremely quiet over the course of the last month or so, as we've been talking about fiscal stimulus, and as that theme has really kind of just enveloped the entire market to a certain extent. And so when you're looking at that, think about what the central bank did today. Now, it was not a major announcement, but it is something to be familiar with given the backdrop of the stimulus conversation, number one, the Fed being quiet, number two. The Fed announces today, guys, and some of you might not have caught it because it was not a major announcement. The Fed announces today that they are lowering the minimum loan level of their Main Street lending program by $150,000. Now, why is that important? The reason that's important is it was at $250,000. They lowered it down to $100,000. Now, the Main Street lending program is equivalent in scope to the PPP loan process. You're talking somewhere between $500 and $600 billion in PPP loans. The Main Street lending program is a $600 billion program. The difference between a PPP loan and a Main Street lending loan, however, is PPP loans can be basically, they're forgivable, right? That's why they're so popular, is because that is forgivable. Whereas a Main Street loan is not forgivable. And so what we've seen over the course of the last 6 months is PPP loans have been just, man, it was like, if you didn't get it, you didn't get it. You had to be aggressive in your PPP loan. Whereas the Main Street lending program, we've only lent up, think about this for a second, guys. We've only lent 3.7 billion of the 600 billion allocated in the Main Street lending program. Whereas PPP loans have been tapped out. You're talking upwards of $597 billion in loans that are available that are directly supposed to go to small businesses that are less than $5 billion in market cap, have less than 15,000, in terms of total employees. But the main part of that lending program is to those small businesses, right? Those mom and pop type shops. Now, a lot of people have not been there hasn't been a ton of thirst for the Main Street lending program given the debt forgiveness on the PPP loans. However, as those been tapped out, it's really created a difficult environment for small businesses that need access to the liquidity to maintain being open when the federal government and the state governments are being very, very cautious from an economy reopening up perspective right now. So what the Fed did today is the minimum level of that loan was $250,000. If you didn't need $250,000, you couldn't get it. You couldn't loan underneath $250,000. Now you can loan $100,000. So they lowered it by $150,000, targeting those small businesses that are in a degree of pain right now due to the regulations on opening up in a pandemic. And so now you're targeting those small businesses a little bit more freely. They also adjusted the terms on those loans. The terms on those were fairly harsh. They adjusted those to be fairly liberal on the terms of those loans, number two. And so I think what the Fed did today was it was their way of saying, we've been begging the fiscal government to get off their ass, to get something done. We've said it in every speech. We've said it in front of Congress. We've said it to them. We've said it to you. We've said it to our significant other. We've screamed it in our pillow at night when nobody will listen to me. I'm screaming it on the top of a mountain. Jay Powell is literally on Mount Olympus screaming, please, federal government, do something because we can't do anymore. And so Jay Powell finally says, you know what? If these clowns won't get their act together, we're going to start doing a little bit. We're going to show up a little bit more. The Fed has been very, very quiet in the last 30 days, guys, outside of fiscal. This is the Fed saying, little by little, if you guys aren't going to get your act together, we're going to start pushing out the agenda a little bit more. So in that scenario, Jake, where we get some difficulty post-election, it will be interesting to see what the central bank does. It is quite telling to me that the Friday before a Tuesday election, when the market is down, 14 out of the last 16 days, that the Fed finally comes in and makes some adjustments from a monetary policy perspective. That's the first time they've done that in really a month and a half, 2 months. And so the Fed might have something to say here, guys. I don't want to overemphasize what the Fed did today, but I do think it's telling that the Fed adjusted the Main Street lending program so aggressively as they did when we are talking about fiscal stimulus, and there are still $597 billion worth of loans aimed and targeted specifically to the companies and small businesses that have been hit the harshest in this pandemic and who have struggled to reopen given the regulations in in certain states, some very, very strict regulations on opening up those companies. And so will we see, the Main Street lending program finally take off and fill some of that liquidity void we've been identifying? That is something to keep an eye on.
Yeah, definitely. And that did fly under the radar there, Matt. I saw like one little news snippet, but it wasn't really talked about today. So I'm glad that you brought that up and broke it down for us. By the way, real quickly, and then I do want to break down all the charts here one step at a time. Emily, how are you doing today? I know that you popped in here a little bit ago. Welcome as always. You're always welcome in the Halftime Crew. How you doing today? And how are you approaching these markets on a Friday after a couple weeks of craziness here, Emily?
I'm doing well. I just popped in because I heard Jake from State Farm was in the show, and Frank is here always on Friday, so I just had to come in and hang out with you boys. But it's pretty much what you guys have said. We know that the election is coming. We've known this for a long time. So it's preparation and just always having a plan of what to do if, right? So for cash flow traders like myself and Mark, yeah, this week has not been the greatest week for us, especially if you've been trading bullish, right? But you have a plan and know what to do, when to do it. So really, it's just approaching it, with caution. Obviously, not looking to get into anything new at this point. Mm-hmm. Wait until after the election, see how things settle down, and then take it from there. But it's such a different experience to what we experienced 4 years ago. 4 years ago, Jake and I were new traders, right? And we were sitting on the sideline, really not participating. Because we were so new into it and we didn't, really necessarily have the experience of trading futures. So we just sat there and just watched the whole thing pan out and discuss it. I think the little thing that we did was maybe just buy, VIX or something like that, but just to kind of feel like we took some action into it. But if you're brand new, don't feel like you have to do, participate or do anything. You can sit in the silence and just let this whole thing pan out, and then just get back in. Like, if you can go on vacation, just chill out for a little bit and see what happens. But it's going to be interesting. It's really, really going to be interesting to see this one, and how it all plays out at the end.
Mm-hmm. Let's break this whole thing down technically if we can. Let's go through the S&P and probably the NASDAQ, at least there from an index perspective. I think, Matt, you've got screen share. Frank, I want to get your insight on this first, though. What are you seeing from a charting perspective here on the S&P 500?
It's a mess right now. In very quickly, a quick way to put it. Right now, we're kind of, Matt talked about kind of the news vacuum, and I 100% agree with him. And I got to say, Matt, I hate Fed talk. You know me, I hate it. You're about the only person who makes it kind of interesting. So tip of the cap to you. That's not easy to do for me. So, but we're technically in kind of that same limbo, right? Where we've got that support zone, that old pivot at approximately 32. We've got to respect that bounce off of that, right? I mean, last time we were at 32, things were a little bit rocky, or we were approaching 32, but buyers, they did find the will, why we could debate, but most importantly, they did. And so that is a price point that we know the buyers have been willing to come off of. So we're closing into that. So there's still room to the downside, right? And, I think James said, it's been a good market to day trade short. And I absolutely imagine so, James. I'm glad you've been taking advantage of it. There's still room on those shorter time frames, but kind of from the swing time frame, and in my opinion, at least, not a lot. That 32, I think you have to respect. On the other side of it, after taking out that 34 support early, we've got a few different levels. That's going to be kind of the primary level for me, is that old support zone as resistance. But we've got that 3340 ish level of resistance that could be a short-term point, in my mind at least, a short-term point where maybe there is a reversal if we can get back above that, maybe short-term into those moving averages and things like that. I mean, we're in a messy spot between 32 and 34, in my opinion. This is not a particularly sweet spot to be in for directional swing traders. I've been largely staying away. Now, granted, a big part of that was earnings, but I've largely been staying away from swing trades over the last couple of weeks. I expect to probably behave the same way next week. My hope is as we get into the week after next, there is a little bit of clarity, or the market thinks there's going to be a little bit of clarity, right? There doesn't actually have to be it. There just needs to be hope, I guess, if you will. So I think for me right now, 32 is the big number to watch on the downside. On the top end, it's right around 33.40. If we can push through that, I do see intraday reversals that might happen in there and work back into that old 3,400 zone. But until we create that higher high and higher low, or start breaking some resistance, I have a hard time wanting to be bullish. I was telling Tim earlier this morning, I'm not particularly fond on being bearish either. And again, I'm more swing than day. So I certainly understand you day traders who've been bearish, so I'm not disagreeing with what you've been doing. But from a swing perspective, it just feels like, this thing could go, news driven stuff, right? Either way, I've been taking a one stab at a time approach. And that's about as brave as I've been willing to be.
Mm-hmm. Matt, that 3,200 level obviously is in play. It's been the support point that we've identified for quite some time. You've also got the 200 moving average there at 3,100. I look at the weekly chart, Matt, and I'm like, okay, these zones of support, they are support. They're strong, and they've been there before. But if that gets taken out, there's some clear error downward here. Am I looking at the weekly chart the way that you are, Matt? In that regard, I see a double top pattern moving into consolidation, and this level and zone of support is significant right here. What are you seeing in the charts, Matt?
Well, obviously you're seeing weaknesses, and once this pivot failed at 3,400, and Frank correctly identified the importance of that number, once that failed, and we talked about it earlier this week as well, it's really trying to find that next level of support. And you can look at that historically. You can look at moving averages. They're not very good in consolidation, so we don't really identify moving averages as support or resistance within an overall neutral, and you got to be some degree of neutral on the S&P 500 right now. When you're looking at trend line analysis, that's really based on trends, and we're not in a trend right now, so you can't really do that. When you're looking at Fibonacci retracement levels, you can't do that in stagnation. And really what you're looking at is simply, and I talked about this a little bit earlier this week when you're talking about the vertical levels of identifying support in the horizontal levels. And right now, I think the market wants to find support, but more than anything, I think the market wants to get through next Tuesday. And so I don't think there's a technical level right now that we can look at before Tuesday and saying, okay, we are looking at buying at this level, or we're looking at buying upon this confirmation. I think it's one of those scenarios where the swing traders are saying, let's get past Tuesday, where the position traders are saying, seasonality can get thrown out the window and all of that. Whereas the day traders are saying, I love this market. Day traders are loving the volatility on a daily basis in this marketplace, especially when you have, the last 4 or 5 trading days, most of them down. So, day traders, this is a day trader's dream in these environments. They love this type of uncertainty. They thrive on this type of uncertainty. But I think the most important question coming between now and Tuesday, honestly, is to the investor class. What is your plan to handle anything that might occur on Tuesday? Because guys, even though I don't believe, we're going to see massive volatility and craziness on election, I don't believe that. It doesn't matter what I believe. There are scenarios that play out, especially what Jake talked about with, a contested election where you continue that void we've been talking about over the last week and a half, 2 weeks into, not only into November, potentially into December. That is a very concerning thing. And not only that, but technically, I know it's crazy train analysis out there, but technically you got a double top, you got a double bottom now. You're looking at an M formation on the weekly chart, which typically pleads with the investors. Remove all the nonsense of the last 3 weeks. Just remove it. Remove the uncertainty from the election. Remove the election completely. You get a double top on a weekly chart, you're buying put options to protect your retirement account.
Mm-hmm.
That's what you're doing.
Yeah.
That is standard protocol. I've talked about that literally in the halftime show. Double top, you slow your momentum. Double bottom, you buy insurance. This is the 5 steps to the art of the reversal. In step 2 and step 3, you buy insurance. It doesn't matter what the variable is. It doesn't matter what the context is. It matters that you double topped, you double bottomed, and the trend is obviously over. It's like, and I've given the analogy many, many, many times in my life. When you see a hurricane forming off the coast of Africa, you're not exactly concerned that your house is going to get blown apart in Florida. You're just not. But as they strengthen coming into the West, and as they get into those warmer waters of the Caribbean, and as they get into the Gulf of Mexico, they start to heat up. They start to heat up. And then all of a sudden, you're a day out, you're sitting down in Miami, right? Great city. Love the city of Miami. Love Miami, especially the Miami Dolphins. Go to it. But you're sitting in Miami, and you're like, the weather forecast is like, there's a 98% chance that your house is going to blow apart, and you can buy insurance right now. Well, you're probably going to buy insurance regardless of what the premium is. So you know, I look at the uncertainty right now. I look at the void of the theme, and I'm just like, okay, the only question I have, the swing traders, they're not doing anything today. Are you kidding me? The swing traders went on vacation last Friday. They're gone. The position traders, once that failed pivot at 3,400, they're like, Santa Claus? There's no Santa Claus this year. It's 2020.
Santa
There's
Claus
no
is dead.
Santa Claus got COVID. He's not coming. He's got a social distance. Not coming. There's no Santa. Position traders are gone. They're done. They're like, whatever. The investor class, they don't get out. They don't get out on a massive beat on Amazon. The investors in Amazon today, they're not like, oh, I better dump my shares. Oh my goodness, Amazon made too much money today. I should dump my shares. They're not saying that. They're asking themselves the question, and this question can only be answered by the individual. Should I buy insurance?
Mm-hmm.
Does the risk outweigh the return? Do I want to remove the uncertainty from the equation? And should I hedge my portfolio as the market has obviously lacked a certain theme? And I'm not saying the market's going to crash, guys. That's not what I'm saying. I believe in the market long term. I do. And I believe a theme will emerge. I do. But the reality is right now, all of those are variables. And in an unknown situation, the market usually goes to protection. The individual has to answer that themselves. But what you can't do is blindly do nothing. You got to take some degree of action. Again, swing traders, like Frank says, they're on vacation, guys.
We're out.
Day traders, they're at work.
Yep.
They're at work today. And it is work. All you day traders know exactly what I'm talking about. It is work today. It was work yesterday. It was work the day before. You're at work. You're punching your 9 to 5 in this environment. The question is to those investors, are you going to hedge coming into the election, given the backdrop of everything we've been talking about? And that can only be answered by the actual individual, because there are a ton of ways to hedge a portfolio.
Mm-hmm. Yeah, I mean, obviously put options are the direct way. You can do futures. There's a lot of different ways you can do it, rebalancing and whatnot, but it is an individual question. I mean, Jake, you're a young man, and I know that you've been day trading a lot lately, but over the last couple of years, as I've known you, you've adopted the longer term mindset for your retirement accounts, and you do have a long-term, kind of growth mindset as well. How are you approaching Tuesday? Are you staying in cash? Are you staying in equity? Are you hedging? Like, what is your take?
No, actually, that's a great question. I was staring at some different put options at the moment. I made some, I have some short futures to kind of nullify the delta on those long-term accounts. But I've actually kind of struggled with this answer because I'm a newer investor. So I consider myself a newer investor, like the last 2 years. And I in March, held on to all the long equity, and I watched it go down, and I was like, ugh. But I used futures on a short time frame to make up for that. And then I started wondering, was that really the most effective? That's like what I did. And then I bought more stock with the profits I made in the futures, and then the stock rallied back. I don't think it was a bad answer. Being that this is a shorter answer, I'm thinking of actually kind of taking some of the profits out of those futures contracts that I have and rolling it into some short-term puts, probably just through the end of the year. And I was literally thinking about this while you guys were chatting and kind of asking myself these questions. Just because this is more binary, I find, right? More than March. I felt more cyclical, right? We were in this kind of environment that felt like we've had this massive market expansion for a decade plus, haven't seen a big sell-off, and then we finally have a bear market. Like, that was meaningful. This is a little more short term. So, but maybe the 1-2 punch combination, I'll keep half those contracts on and flip into half of the other short-term ones. But I'm figuring it out at the moment.
Yeah. And it is an open question for every investor out there, Matt, whether you're a new investor or an old investor, if you're going to stay in equity or if you're going to ride it out. It depends on your timeline and your risk tolerance, but you should have the skill set to be able to do that and check your risk and check your leverage and all those kind of things. Tuesday is the black hole right now. And Santa got COVID.
You got 2020.
Bob.
Had to do it.
Had to do it. All right, let's flash through the indexes here. And I'm going to have Matt, you just kind of go through the chart. Frank, you give me the analysis on this. And then we're going to get to corporate earnings here in just a minute. Give me the NASDAQ next here, Matt, if you can. And Frank, a little bit of a notable difference in some regards. You know, we're closer to support on some of the other indexes. This one's got a little bit more room, but basically the same basic pattern. What are you seeing here in the NASDAQ?
Yeah, I mean, that's a pretty good way to put it, Tim. It's the same, but it's, you know, it's got more room to support, right? And, you know, as I was looking at tech stocks this morning, you know, I go through, I don't know, in my tech watch list, I don't know, 220-ish, 200-ish tech stocks. And they all look just not inspiring, at least from a bullish perspective. There's a little bit more room, in my opinion. I think it's a pretty clear, there's really, technically speaking, there's just, to my eyes at least, nothing to get me even thinking until 10.7 on the NASDAQ. And so if I'm going to buy off this bounce, and I'm not, it's not something I'm looking to do, you know, whatever, you know, it is that we're looking at right now. But if I am, I'm thinking, well, the S&P, I'm pretty close. My stops, you know, betting on support's a little easier than on NASDAQ. So I actually see a little more downside on NASDAQ in the short term. I mean, kind of on the top side of things, very similar to the S&P, right? Where we took out that 11.6 once that pivot broke, once all those moving averages fell through, things kind of got pretty ugly pretty quickly. I just think there's a little more risk over here in the tech. And part of that, let's just call it what it is part of it is Amazon and Apple, right? And Facebook and the companies that are in the NASDAQ. And so I certainly understand that, but it looks a little choppy in tech. It's not just the big names. I mean, it's a lot of the, you know, mid cap names are looking pretty rocky as well.
Let's flash through the commodities next here, Matt. Crude oil, if you can. You know, you were talking about the breakdown here at 36, whether it closed down there. It actually tried to battle back and close above 36 there late in the day yesterday, but now we're back below these levels. Matt, pretty ugly long-term chart. What are you seeing in crude oil?
Nothing really to update. We clipped support 2 days ago. We've held that support channel on the breakdown between 36 and 35. And I kind of just, you know, I do have it as a confirmed breakdown on the weekly chart and on the daily chart. I think you got to have a bearish bias on crude right now. It's just the degree of how bearish you want to actually be on crude. To me, and again, this is not technically, you know, this is just more from a psychology perspective. But I think if crude gets under 35, I think 30 is in play here.
I'd agree with that.
I
don't know if I'd agree enough to take a trade on it, but I would agree with the analysis. I wouldn't go against it. I guess I'll put it that way.
There's
many headlines that could come out in the next 2 weeks that would change that analysis. And not technicals. There's many headlines that could change that analysis. And that's the one thing that is concerning. I do think it's playable to the downside. Maybe you're a little bit more aggressive on stop loss management here, but I do believe it's playable to the downside. You got to be aggressive, in terms of your triggers, and I think you got to be conservative in your strategy selection, given the fact that there is the backdrop of the uncertainty and stimulus and what's the Fed going to do and everything we've been talking about. But you got to have some degree of bearish bias here. I mean, you had over 85% of production in oil get shut down in the last couple days due to the hurricane. What's the hurricane called? What's its name again?
I haven't been tracking this one.
Zeta? Is it Zeta?
Zeta?
Zeta, Z-I-T-A, it's something like that.
Yeah, Z-E-T-A.
Z-E-T-A, Zeta. But yet crude didn't even bounce. I mean, it bounced slightly, but it still held the lows here. So I do think you got to have a bearish lean here. And if you clip that 35 level and you see that kind of that low of the day yesterday, try to get under that, you should see some pain in crude. So I think if you're a long-term individual in crude, you're in protection mode right here on crude, and you should have been in protection mode starting yesterday. But if you're looking at a swing trade, something to the downside, I'm looking at that right underneath that 35 handle as a potential trigger to the downside. You look at it on the 15-minute chart, you got some stagnation between 35 and really 36.5. You clip that 35, you should see some room to the downside.
Mm-hmm. Gold next, if we can here, Matt. There's not much here in the analysis in my perspective. Do you see anything?
Nothing to update.
Yep.
Move on.
The dollar, same thing.
I have nothing to say to the dollar today.
Bitcoin, though, give me the
say.
Bitcoin chart because I got Jake here. I got to get Jake's.
And I said I have nothing to say to the dollar. There's nothing to talk with the dollar today.
Yeah. Jake, how are you playing Bitcoin lately? I haven't talked to you in a couple of weeks, and I know that we had you on the podcast about Bitcoin. It's had a tremendous run. Matt and I, we've been analyzing this every day. Matt's been all over the technicals and whatnot. How are you approaching the cryptos right now, and specifically Bitcoin?
So I haven't added to that position since it broke above 10K. Like 10K to me was like a pretty significant, rather whole number, right? 5-digit number. So what is that? It's been like a couple months since that's happened. So I was willing to add to my long-term holdings at that level. I'm not adding at these levels. I was talking to somebody earlier today that had a decent amount of holdings, and my advice to them was look at the 14 kind of $1,000 mark, right? So kind of the 14 is rather significant. It kind of looks at those all-time highs, like those wicks out there back in type level. We're almost there. And I said, all right, if we're coming back here and we're getting there now, I said, well, maybe look at reducing your position slightly, because they were somebody who fought back from the $20,000 price point, right? So they had to buy in at 20K, and they've been fighting this position to try and make it into a winner. They had it at these low or much lower prices, and they were finally getting a little bit of profit in the account. I said, okay, look to pull out. For me at this point, it's all been profit for a long time. I'm not looking to actually sell any of my position at this level. I might add slightly at like 14.5, depending on how much momentum is behind it. And then after that, I'd actually be looking to trim at 18 to 20K. That's where I'd really be looking to trim.
Sure. And so you've got a plan around these different significant price levels. That 14K has been there for a while, Matt. You've been talking about it. Now here we are, even in the face of market uncertainty, we are pushing close to that 14K on Bitcoin. We can talk Bitcoin more on another day. We've got a lot of corporate earnings we got to get to. So let's do that right now. Matt, let's start with the big tech names. I mean, you've got a list there. I'll let you kind of just pick which ones you want to start with, and let's break them down one at a time.
Well, let's talk about the biggest one of them all, Apple here. Let's and guys, I'm going to give raw numbers and then just kind of some overall headlines, and then we can discuss it. Apple came in at 73 cents a share versus 69 cents a share. Revenue came in at 64.7 billion versus the expectation of 63.7. Now, a little bit historical understanding of Apple. Apple is notorious for constantly lowering projections and constantly beating those projections. The rest of the market does it as well, but Apple is notorious about it. Apple barely beat expectations, guys, lowered expectations here. And so out of all the big tech, reports we had over the last 24 hours, the one that really makes a lot of sense to me is Apple. I completely understand the lack of buying interest here in Apple. They missed on iPhone sales, and again, not in part, but due to the release of their new phone. So that's not captured in these types of earnings numbers. This is before the, what is it, the iPhone 14s 5, 6, 7, whatever that is. So when that latest edition of the phone came out, that's not captured in these earnings numbers. So Apple iPhone sales missed in part largely due to the release of the new phone, which means we're probably going to be talking about the fourth quarter being fairly decent for Apple. But for right now, they did miss on iPhone sales, slight beat on revenue numbers, slight beat on EPS numbers. But one of the things that Apple declined to do, which gave people a little bit of caution, is they declined to give guidance. And for a company like Apple to decline to give guidance really represented a certain degree of uncertainty. And when you were looking at Facebook last night, and like many of you guys, I was in front of the market when they were reporting. And let's go down to a 5-minute chart here, and let's look at Facebook's report. When you saw Facebook announce their numbers, the initial movement was, I mean, the algorithms were all over this to the buy side, 100% all over this to the buy side. And then it came right back down, and then simply consolidated here. Mm-hmm. Apple didn't report till after Facebook, after Google, after Amazon last night. When you're looking at Amazon, a very similar price movement last night. Algorithms bought up on the headline news, and rightly so. Most of these financial reports, guys, they go directly to algorithms. Like 85% of all financial reports right now go directly to algorithms, and the algorithms bought it up, as they rightly should have. Amazon's numbers were robust. Facebook's numbers were robust. What happened? Comes back down. Apple reports, doesn't give any type of momentum coming into it. Once that cash open happens in the morning, boom, boom, boom. You saw the same thing in Apple. You saw the same thing in Amazon. So when you're looking at Apple here, when they reported, look at the algorithm difference, guys. And this will play a role in the future. It's just not playing a role right now. But look at the algorithm difference. The numbers came out, nothing, and then just nothing. So there was zero buying interest in Apple. And once Apple came out, it was just like for Facebook, for Amazon, everything other than Google, it was just like, all right, we're done fighting for today. We're done. We're going to capitulate. We'll live to fight another day to a certain extent. So when you're looking at some of these earnings, they don't make sense. I'll be the first to say that. Apple, to me, makes sense. Now, with the gap in the run underneath 110, you're really looking at this from a market perspective. Where is it going to find support? Is it going to find support at 100, a very significant whole number, to that 104? I think you got to be in some degree of buy mode at that point. If you get more price move to the downside to 104 to 100, you got the cushion right there underneath the $100 mark with the 200-day moving average. I think you're looking there as a buyer from a position perspective. I think you're looking at it as a buyer, maybe even from an investment perspective. For a swing trader, there's nothing to see here. Mm-hmm. There's no trade to be had here. Don't even look at Apple from a swing trading perspective. It's in that no man's land from a swing trading perspective. It needs some time to really kind of set up. To me, Apple really, I mean, everybody was anticipating it. They barely beat. It's really kind of a nothing burger for me with Apple. Now I have a little bit more to say on the others, but when you guys saw Apple report the numbers, the price action, what do you guys think of Apple's report?
I'll start, then I'll kick it over to the team here. Number one, I don't think it's anything to be unexpected that Apple's down 5-6% on the report. No question about it. The more I thought about why, though, I don't think that anything that Apple told us last night changes the long-term thesis on Apple. It changes the short-term analysis on Apple. And also with the black hole on Tuesday, obviously markets are in risk-off mode. But those iPhone sales disappointing, Matt. I mean, isn't that somewhat to be expected? You got a new phone that's not counted in last quarter's report. They're going to be selling the new phone over Christmas. If I'm an iPhone junkie and I got to have the new phone all the time, I wasn't going to buy a new phone before this one came out, right? And so it's like, listen, I get it, know, I do understand that. Yeah.
Yeah, I don't think it was the iPhone sales that really caused the investors a little bit of anxiety. I think it's their price to sales ratio that's at an all-time high on the backs of them increasing revenue 1% year over year. I think that's exactly what it is. I don't think it's the iPhone sales because like most people were like, oh yeah, who's buying the old iPhone when the new one's released? You know, we don't care what Neil Karkashi says about how deflation happens on old editions of the iPhone. We call that depreciation, Karkashi. But no, nobody's shocked at that. But they are a little surprised that Apple only made 73 cents versus the 69 expectation. They're a little surprised that they only, and I say only, but they only came in at 64.7 billion, which only represented a 1% increase in revenue. And when you're dealing with a company like Apple, and we all love Apple, it's one of those high flyers out there, it's a beloved company, but when you're dealing with a company like Apple, and they miss on iPhone sales, and they only show 1% growth year over year with the price to sales ratio at an all-time high, how do you justify buying there?
No, it deserves to be down. Yeah,
it deserves to be down. Now, does it deserve to go down another 20? No, absolutely not. Absolutely not. I'm just talking about the market reaction on earnings. But I do believe at that $100 mark to 104, you got to be looking at it as a buyer. You know, worst case scenario in the short term, you take a 10% price movement to the 200-day moving average. And if you can't buy Apple on a 200-day moving average bounce, you can't buy anything on a 200-day moving average bounce.
I think that's a very fair point. Frankie, how are you reading the chart here? Obviously, price reaction, you know, hit those MAs. Earnings now is behind us. You got the pivot point, the 200, like Matt talked about. How are you reading the chart?
Yeah, I mean, I think you guys nailed it. You know, as we pull, you know, into that support and, you know, the pivot at 104-ish or the round number, old breakout point at 100, and worst case scenario, maybe even the 200-day moving average. I agree with James and with you guys that it's not a buy today, and I won't buy anything until I get the signals that I want. But in that 100 to 104 range, and if, you know, don't get the signals there, like Matt said, if you can't buy Apple off the 200, you don't believe in buying anything off the 200, which is fair. That's your prerogative. But I think a lot of us for positions are very open to that methodology. So right now, you know, if I'm going bear, there's probably better things to do. You know, I thought, do you guys remember the Mad TV lowered expectation sketch from maybe it was late 90s, early 2000s?
I don't know.
Basically, it was a dating service, right? And Mad TV was kind of like Saturday Night Live, right? And they would just have, you know, it was a dating place you went when you had lowered expectations. I'll leave it at that. And I think that's kind of what happens, you know, as Matt said with Apple here. You got to kill it. You know, things that are killing it, and they're like Amazon, they're not running. How is something that's not, you know, not bad, you know, but again, not killing it, how's that going to be the one that pops? So it is a nothing burger, as James said, but I do agree that, you know, as I'm kind of projecting going, you know, into later, you know, into the year, this is definitely something in that 100 range that I would be interested in looking for opportunities personally.
Yeah, I'm interested at lower levels. You know, once you get the signal, I like the way you said that, by the way. Once you get the signal that you demand and that you need, for sure. But I still am going to have Apple on a target list. Maddie, where you want to go next? Amazon, maybe, or
well, I want to stay on Apple.
More on Apple.
Yeah, I just want to stay on Apple very quickly, and the reason these earnings numbers across the board have been good, and I kind of feel like Mark, who is a value investor, likes lower price action, and people like Mark, which is most of the investor class. They would rather buy Apple at 100 than 140. Can we all agree with that?
Yep.
100%.
Okay. And so I kind of feel like the entire buyers in the market, the institutions, the hedge funds, everybody in the market is looking at next Tuesday and they're saying, let's get rid of that black hole. Let's get rid of that black hole. And the whole market is looking at these earnings numbers, right? And they're like, oh my God, these earnings numbers are so good. And they're like Lord of the Rings and the king on Lord of the Rings, the king of the Rohans. And they're looking and they're just like, bring it down, bring it down, bring it down. And they're just screaming to the market, come down a little bit more. Just come down a little bit more. Just keep on coming down. Give me Apple at 100, right? Give me Amazon. Let's move to Amazon for a second. Amazon reports, think about these numbers, $12.37 a share, expectation $7.30. How does that not impress buyers?
dude, Amazon crushed it.
How does that not impress buyers? That is a fantastic number.
Yeah.
Revenue, $96 billion. Amazon trying to play their best Walmart right now.
I know, right?
$96 billion. Expectation 92.8. Revenue, unlike Apple, up 1% year-over-year growth. Revenue, 37.4% year-over-year growth. And the absolutely only negative thing you can say, about Amazon's report is they offered a wide range on their EPS guidance. They didn't lower it. They offered a wide range on their EPS guidance so that because of the cost of the pandemic, not the uncertainty of the pandemic, but the rising cost associated to making sure their facilities are clean, that rising cost. And so that's the only cold water, and Amazon's down 5.5% today. That is the market literally just saying, bring it down, bring it down. Let's remove the uncertainty from the election. Let's talk more about stimulus. Let's talk more about a theme developing, and we're getting ready for a buying perspective. Now, is that buying perspective at 3,000? Maybe, maybe not. Is that buying perspective more down around the 2,800 to the 2,600 zone, where the 200-day moving average? Most likely. So I do think patience is at play here, but I also believe based on these raw earnings numbers, the investor class is looking at Amazon, they're looking at Apple specifically, they're looking at Microsoft, and they're saying, oh my goodness, how did we not? Oh, and by the way, Microsoft indicated all of this. Microsoft told us what the market was going to do on Tuesday, this reaction on Thursday. We said it about Microsoft. Look, this should have been gobbled up. It wasn't. You saw the same thing in Apple today. You saw the same thing in Amazon today. Well, a lesser extent Apple, but you saw the same thing in Amazon. You saw the same thing in specifically Facebook today. The only one that bucked that trend was Google. And even Google, after the cash open, is coming down fairly aggressively. Google, on the other hand, and this is the thing. I look at Amazon and I look at Google here, and I know they're in different sectors, but they had the exact same report. They really had a very similar report. Google, $16.40 a share, expectation $11.40, massive beat on EPS numbers. Google, 46.2 billion, 35.2 billion expectation, destroyed revenue projections, which basically increased revenue year over year 14%. Google, where did they beat, guys? I'm not even going to list them. I'm just going to say this. They beat everywhere. Everywhere. Every aspect of what makes Google Google, they beat. Specifically, advertising revenue on YouTube. YouTube advertising revenue clipped over $5 billion. What we've seen out of advertising in these companies, Google, massive increases in advertising. Snapchat, Facebook. Think about Facebook advertising. Facebook had a boycott. Facebook had a boycott in this quarter of reporting, and yet saw an increase of 20% in advertising growth.
Mm-hmm.
Okay, and I'll get into Facebook's numbers here in a second. But Google, massive increase in advertising growth. Snapchat, Pinterest, Google, Facebook, name them all. Name all the companies that thrive, survive on advertiser growth. All of them massive beats there. Advertising, social media advertising, online advertising is back. And it is not going away. And it's probably going to get even bigger and bigger and bigger in the future. And think about this, guys. As the American consumer is sitting at home, the American consumer is embracing online spending more than any point in human history. At any point, advertising growth online is going to be big time moving on into the future. And so I think the investor classes are looking at these companies. Take Facebook, for example. Facebook reports a fantastic report out of Facebook. And I hate saying that because I don't like anything about this company, but it doesn't matter. Facebook, $2.71 a share versus the expectation of $1.94. Facebook, 21.5 billion versus the expectation of 19.6. Facebook increases 21.6% year over year growth. Facebook advertising revenue up 20% despite the boycott. Facebook, the only negative, and that's the thing here. On Microsoft, you can point to one thing in their business that was a negative. On Amazon, on Apple, on Facebook, you could point to one thing in their earnings report that was a negative. Everything else was robust. What is that one point on negativity on Facebook? Subscriber growth, specifically in their two hottest markets, Canada and the US, contracted 2 million. They had an active subscriber base in those two markets of 198 million subscribers. They went down to 196 million. So that's the one drawback. But that's the thing in these pockets of void where you have this black hole of the election. It's that people are looking to sell. We've been talking about it for 2 weeks. They're looking to sell. What did they do today? They found their reason to sell. Is it a legitimate reason? No. And that's why the buyers, the long-term investors, the institutions, the hedge funds are saying, just bring Facebook down a little bit. Bring it down into that 245, 250 area. Bring it down into that, that historical resistance, old support. Give me that 240. Let that 200-day moving average creep up to it. Give me that. Give it to me at a little lower price. I'll take the risk to the downside based on these earnings numbers. That's what the investor class is saying today. It's not that they're panic selling. They're just patiently waiting, in my opinion. These earnings numbers have been fantastic. The raw numbers have been fantastic. It's everything you want to see in an earnings report. Yes, we are micro-analyzing the negative things that a company is saying in their guidance, or the one aspect of these massive macro international companies of how they didn't do something remotely good in one aspect of their company. But that's just the market mentality right now. That's all it is. It is a risk-off mentality. We're waiting for a theme to develop, and we're waiting for the black hole of the election to get removed from the equation, and so that we can start mapping out stimulus. We can start mapping out how the government, regardless of what Senate or President, how we're going to map out economy reopening up themes. We're just waiting to have some of this uncertainty become more certain, and then we can focus back on the raw numbers here. I think these are buying numbers. I like them. I don't think anybody loves the price action, but the investor class who does not care about a day-to-day action, I do think they're looking at picking up the dip here. But I just think some of this uncertainty needs to be removed.
Mark, I'm going to bring you in here in just 1 second. Out of all the ones you just talked about here, Matt, and I'll bring Emily in as well. I was most impressed by Amazon, by the way. I thought it was incredible, the revenue that they actually produced, and the projected revenue for the fourth quarter, Matt. We know it's holiday season. We've got people shopping online more than they ever have, like you've talked about. They're projecting a 28 to 38% growth of revenue year over year at Amazon, 112 to 121 billion. Guys, one of the knocks over the years was they're not Walmart. They don't do the same revenue. Matt, they're getting to the point. I thought it was a really good call. They're playing their best Walmart right now on a revenue side of it. So there are some things to be impressed with a lot of these numbers. Mark, welcome to our show. I'm going to get Emily's thoughts first because she popped right in there. Emily, what are your thoughts on the whole thing? And then I'm going to bring Mark in.
Well, kind of like what we talked about earlier, when you're sitting on the sidelines, just kind of figuring out what to do. These are the things that you just have to think about if you're an investor, right? If you don't already own, Amazon or Facebook or Apple, if you're thinking about adding on positions to those companies, sit down and start to come up with a plan as to where you would want to start to own, to start to picking up some more shares of it if you don't already have it, or if you want to add to some, And part of what we do as a community is having the having people that you can talk to and analyze these things and talk through all of these things. Jake and I do this all the time. We'll sit there and say, okay, well, I only have X amount of shares on Apple or Facebook or whatever. Is this a time to add on to them? And we sit there and we talk about it, and we kind of go through the whole process and just kind of figure out where you want to get in. But if you're sitting on the sidelines, or if you're just kind of figuring out what to do until the election is over, start to design these things and map out these things so that you can have a way to execute them when that opportunity comes, and you're not sitting there trying to figure it out as your chances literally dwindling away. So I'm curious to find out where Mark sold his naked put on Apple so you can go buy them a cribs is what I want to know.
Mm-hmm. Mark, I would almost guarantee outside of that black hole, Mark's probably not adding new naked puts today. But Marky, we will get to the McRib thing here in just a minute.
You have to. Big
We'll
news.
do it right at the end is big news. Mark, what's your
December 2nd.
December
wait.
2nd. He can't wait. He can't.
Wait, hold on. This is happening.
It's happening.
McDonald's.
First time since
McDonald's.
2012, the McRib will be in every McDonald's nationwide, December 2nd.
How can I use that in election updates? Is there some correlation there?
Listen,
Does
McDonald's
McDonald's
realized, hey,
know
this,
something we don't?
McDonald's said this is a rough stretch, and we're going to give you a little bit of tasty heaven to help you get through it.
I refuse.
I don't think anybody has anything to say of that.
Little tasty heaven, little treat to get you through the problems in the world here. Get yourself a McRib.
Listen, me and Tim recorded a Facebook video
I'll
one
taste
time
it
of
again.
eating
We
the
all gonna have
McRib.
a McRib and taste it again and have that, and all of us just go try to taste it again like we did last year.
Oh, it was terrible. I mean, it was terrible. You had to have like a Coke just to like choke that stuff down.
It's not my favorite.
I was gonna say it's
item.
scratched on the way down, but it's more like just it turns to liquid. It like dissolves into straight liquid. Mark might as well put it in a blender and then just eat it with a spoon.
Hate is going to hate, but the McRib is delicious.
How is it going to feel to not have to buy like 20 and stuff them in your freezer? To be able to go day after day and get fresh McRibs, that's got to be exciting for you.
I'm very excited.
They can't freeze well. Do you really buy like a whole bucket of them and freeze them?
I've actually been working on my own McRib recipe. So.
Oh, I like it. Marky, tech earnings reaction. What's your read on everything's going on?
Not a lot to add to Matt. The only thing, and once again, I'm going to come across very bearish here, but it's mostly specifically on Apple, not Amazon. Amazon was, listen, you pay a high valuation on Amazon for a reason, and that earnings report gave you zero to stretch about. If you didn't like Amazon before, you might actually like it. If you liked Amazon before, you didn't get a dang thing in the Amazon report. Facebook's earnings was good. Google's earnings report. Apple's was a little, the only problem I have with Apple is that I'm up 1%. What was it? Revenue year over year. And where is the price a year over year? Like for me, valuation on Apple's really, really stretched. But you got your whole iPhone super cycle coming up, which will help prop up prices when that occurs. We're not going to really know whether valuation today is justified or not till we see those iPhone sales. So on Apple, it is like on the iPhone super cycle, the 5G super cycle. It's a bet on that, right? It's probably a decent bet, right? Especially if you get much deeper discount. But this is pre-programmed. This is election. This is stimulus. This is lack of a theme. The earnings, it's not the earnings, right? And moving forward, when we get into mid-November, when we get into December, and we're formulating a plan, listen, you had a really positive earnings season to go back on. You can poo-poo valuation and all that, but earnings season will be a hit. It will be a solid double, maybe stretching into a triple, really, really good backdrop. And so if you then get stimulus, if you then get uncontested election, if you get a little theme, you're going to have a wonderful earnings season to build that theme upon. If this market tanks, it's not going to be because of earnings. That's for certain.
Mm-hmm, mm-hmm. Well,
I loved your baseball analogy on that double, maybe stretch into triple. I would give it a Jeremy Giambi softball home run.
So it is
Jeremy Giambi.
and it certainly
I just threw a Jeremy Giambi in there.
Oh, goodness gracious.
The earnings season.
You're the only reason I know who he is. Sorry,
certainly
Mark.
has been a home run if you get a theme to build it upon. Because then when the bullish smash the buy button, when that happens again, because it will happen, we just don't know when it will happen, right? A week from now, a month from now, a quarter from now, you will be able to look back and have this solid foundation of whatever the positive bullish theme is, this absolutely rock solid earnings report to build that theme upon. So hurts today, right? Hurts today, but whenever that theme kicks in, man, you're going to look back at tech earnings and you're going to look back at earnings as a whole and be like, yeah, makes sense. So I'm keeping powder dry, you know, like anticipating the volatility that we're heading into this election, you know, position. So I have some buying power in case things do spin out of control to buy some stuff at a discount. But I think there is a buying opportunity down the road, assuming we don't get a contested election that gets ugly.
Mm-hmm, mm-hmm. Yeah, yeah. We still have quite a few corporate earnings to go through here, Maddie. Do you want to keep rounding them up?
Yeah,
for us if you
let's
can?
go to Starbucks very quickly. A couple things out of Starbucks. First and foremost, EPS numbers very similar to what we saw at Amazon and Facebook. EPS numbers were very, very healthy. 51 cents on the EPS number. Expectation was 33 cents, so a very, very healthy beat on EPS. Revenue came in slightly above at 6.2 versus 6.1, so a beat on revenue technically, but right above that level. 8.1% decrease in year-over-year growth, and they slightly did lower guidance, and that's the only drawback here on Starbucks. Really, really like the EPS beat. Starbucks had some positive commentary over how quickly they have recovered from where they thought they were going to be post-pandemic. And they said that specifically in China and the US, which are, you know, goes without saying, two of the most important markets to Starbucks. And I think you can say that about most companies in the world now today. But they were very, very happy with the progress they have made post-pandemic in both China and the US. The only drawback was the slightly lowered guidance. They did talk about a little bit of uncertainty due to the pandemic, which has been consistent in all earnings reports in the first quarter, second quarter, and third quarter reports. To me, obviously, market down a little bit today, but that's just what we've seen in earnings. Tackle Trading was literally one of the only companies talking about this a week and a half ago about, you know, how the market's just not buying into good earnings, and now everybody is literally talking about it. That is the theme that is happening in Wall Street now, and so I feel like Tackle was pretty quick on that. Starbucks, same thing. This is a report that typically is bought up. In almost every other market condition, this report is gobbled up by the market, despite the slight lowering of the guidance. To me, I'm not looking at buying the dip here, but if you do recover that 50-day moving, not recover, but if you do hold that 50-day moving average, I do think it keeps the breakout from a directional perspective alive here. That 90, and I'll give you a number really quickly here, that 91 level. I still think you're in consolidation, you're some degree of neutral, but I still think based on these numbers, if we do get some support forming at 86, right where that 50-day moving average is, I don't think you're touching it on the downside the same way I could see that on Amazon or Apple or Facebook. I still think you're looking at that as a potential breakout.
Frank, are you seeing the chart the same way? You know, from it would be nice and constructive. We could rally back, test that level, and then break out and get a trade from it.
Yeah, as long as that holds, you know, and we're a ways away from that potentially happening. But I would agree with that overall. If we can hold that 50-day moving average, get pushed back into resistance, I think this is one of those scenarios where ideally you want to grind your way back up to 91, get pulled back into 89, 90, which would, you know, at that point probably line up with the 90 MA, get the springboard off. So if we hold support, then the break, I would agree with Matt. I think Matt's spot on there. If that support breaks, I think we're probably looking at new development, whatever that might be.
Mm-hmm, mm-hmm. Good. Next, Maddie, I know we got Exxon, Chevron to get to.
Let's get rid of two more from last night. One that I was anticipating quite a bit was Activision. You know, it's one of those companies that I really do believe in long term. And it's had a, you know, great last 6-7 months. When you look at the recovery, you know, after what happened last, and this was not COVID related. This was more, we hate what the gamers hate. I can't remember what the news was, Frank, but some game came out. It might have been Call of Duty. I think it was Call of Duty.
I think so too. Yeah,
they just didn't love it, didn't get the sales, and that's really what led into this massive miss on earnings and then the downward movement in price. This company never really got beat up by COVID. this company really kind of held its channel, and then it's been a fairly consistent performer over the course of the last 6, 7, 8 months. In recent history, though, it's struggled. It's formed a head and shoulders pattern from a reversal perspective. Obviously today we're breaking that, neckline, whether you're talking about the horizontal neckline or whether you're talking about the vertical neckline within an overall reversal pattern. You can see that vertical neckline right there. So you're breaking that vertical neckline. You have the head and shoulders formation, which gives you a typical bearish lean towards that 200-day moving average. The raw numbers, I was looking at these raw numbers. I was anticipating the raw numbers in Activision, not because I was looking at picking up some on the report, but I was seeing if we could recover that trend and we could look at that from a potential breakout at 83. That obviously is thrown out right now. You're not looking at a breakout in any capacity on Activision the same way you might be looking at that on Starbucks. But in terms of the raw numbers, were actually really, really, really good. 78 cents a share versus the expectation of 65. Revenue came in at $2 billion versus the 1.7 on expectation. Revenue increased 52.4% year over year. Absolutely fantastic numbers, especially year over year growth on Activision. What was that one thing that the market focused on, as we've seen in a lot of these earnings? What was that one thing? Well, this one thing was a pretty big deal for Activision. And unlike Starbucks, where they just had a slight lowered guidance, and when I mean slight, I mean it was fairly slight. On Activision, they lowered guidance fairly aggressively for the fourth quarter, and that's what really is the concern here. They went from $1.02 in EPS projection all the way down to 63 cents. That is a big time revision of their guidance. They lowered their revenue guidance 2.47 billion down to 2 billion. And so with a legit lowering of guidance here on Activision, that obviously gives everybody, both from a short-term and a long-term perspective, a little bit of anxiety. Hit the sell button. Let's reassess the situation. And so when you're now reassessing the situation, you're seeing this as a downward moving projection. You certainly has some degree of minor support at 75 with that backdrop, that backstop of that 200-day moving average at 71.85. It's a company I like. It's a company I believe in long term. I think the gaming movement, and maybe I'm speaking my book because I do like to game. It's now for me. I like to embrace those things. But I think that movement is here to stay and growing. But in the short term, I think we're looking at that 200-day moving average. I think everybody in the market on Activision that follows this company is looking at that 200-day moving average, very similar to this 200-day moving average off the drop due to COVID. So that was kind of the drop we saw in COVID, nothing that we saw in the rest of the market. Real strong battle here at the 200, but that was, again, COVID, every second of every day type mentality. I'm looking at that 200-day moving average on Activision. I'm saying, okay, not looking at picking anything up at 75, but could you initiate a position on the 200? Could you add to a position on the 200? That's the question we're looking at here on Activision. So let's give it a few days. Let's give it till the black hole is removed. We all know what the black hole is. It's next Tuesday. Let's remove that uncertainty from the equation. Let's see how Activision handles this lowered price between 71 and 75.
Mark, anything else on Activision that you saw you want to add?
No, I mean, I've been selling naked puts in the 60 to 55 range for 8 months now.
Yeah, you've been selling naked puts on these guys forever.
And I rotate them out. I'm going to do the same thing I've been doing. I would love to pick up deep discount on Activision. What are you going to, gaming, the numbers are reasonable. The lowered guidance causes a catalyst. Market spins out of control. Who knows? Maybe you get a really deep discount on Activision. I'm all over that if that happens.
Good. Next, Matt, Twitter.
Let's take
this is the
peek.
one you wanted to see a lot here. So yeah, what'd you see in Twitter?
Well, obviously the Snapchat and Pinterest, they should have reported last week, both Facebook and Twitter, but Facebook and Twitter bucked that trend of social media dominance on earnings. That was the one space that had some degree of positive momentum from an earnings perspective. And, especially with the Pinterest, gap out yesterday, and the Snapchat gap and run from last week. And so this area of the market has been a hot area of the market, and a lot of people were anticipating whether or not Facebook and Twitter could achieve the same degree of movement or momentum that Snapchat and Pinterest had. This is just, we're tight, guys. We're tight against the election, and Twitter comes out and they say, okay, we're going to report 19 cents a share versus the expectation of 6 cents, a very substantial beat on EPS numbers. 936 million versus the expectation of 756, a very healthy beat on overall revenue numbers. That represented 13.7% increase in growth year over year, which is on the light side for Twitter. It's on the light side for a growth company. So that's a little bit of a negative. Their ad revenue was up to $800 million, guys, over $800 million in ad revenue at Twitter, which was above the expectation there as well. And so, and that ad revenue increase didn't match the Facebook ad revenue increase of 20%, but it was close to about 15% in increasing ad revenue. They did warn, though, and this was that one thing that they focused on, and meaning the market, and that's the theme today, is positive earnings. Let's focus on the one flaw. It's a perfect scenario. Let's focus on the one flaw. And with Twitter, that one flaw was they warned that their ad revenue, which has been a boon for Twitter in recent months, their ad revenue was they warned about it due to not uncertainty of COVID, because the uncertainty of COVID is actually a good thing for Twitter. And I know that's weird to think about if anybody's new here to tackle trading, but the warning was specifically on the uncertainty of the election, which is obviously to be understood when you're dealing with a Facebook or a Twitter. Both of them on the hill this week, both of them for reasons that are understandable, are absolutely hated by politicians, both on the left and the right. And so obviously Jack and Twitter is looking at this, the political uncertainty of the movement. And with Twitter and Facebook, that political uncertainty is not going to be removed, regardless of who the president is. Because if there's one thing Americans can agree with, both right and left, we hate Twitter and Facebook.
Yeah, I think that is true as well. And you saw the users.
It can unite us.
It does.
Our hatred of Facebook and Twitter can be uniting force behind Democrats and Republicans. Unite. The country unites with their hatred of Jack and Jack Dorsey and the alien Mark Zuckerberg. He's not even human. It's an obvious one.
He's a cyborg. There's no question about it. Definitely probably Star Trek, the Borg type dude right there. Obviously, I mean, Facebook lost some users, Matt. Twitter actually did gain some users, just not what they wanted to gain, right? But they're retaining users, and their users year over year are up big. I mean, the long-term themes behind Twitter, if you were a believer in the company, they haven't really changed here. Now, the short-term analysis, obviously, you got the black hole on Tuesday, you got the big gap down. Now you're below moving averages. But you still see the long-term themes on Twitter as healthy and they're still intact?
Yeah, but when the pain gets on Twitter, it reminds me of United States Steel, and I don't even want to bring that company up right now. Mm-hmm. So yeah, when the pain gets on Twitter, it gets fast, and it is real. It's that old Seinfeld skit, right? You look at some of these other price movements. Twitter earnings, boom. Twitter earnings, boom. Twitter earnings, boom. Nobody should be shocked at this on Twitter. The only people shocked at that Twitter has the ability to do this are people that have literally never even knew this company existed until today.
Mm-hmm. Mm-hmm. Marky, anything to add on Twitter? Frank, you chart read here in a second. Market for Twitter.
Don't front run, guys. That's the only thing that needs to be said. Don't front run.
Yeah. Listen, I just would like to take a chance to mock Dave Portnoy for front running Twitter and gloating about it yesterday.
I do.
Yeah, probably Twitter, called your shot a little too soon on that one. And I said,
he front ran Twitter and it was up yesterday, and he was like, "I'm so awesome, Warren Buffett sucks."
How's that Warren Buffett sucks hot take?
Needless to
for
say,
you
when I went to
today, Dave
Portnoy's
Portnoy?
Twitter account this morning, he did not have a morning update on stock.
He didn't have a morning
After-
update on Twitter. He wasn't
No,
pumping and
or on
dumping
his
today.
overstock call or on, so.
Taking
That
the
is the
day
one
off,
thing
is it?
I do appreciate about markets not going up and up and up is I don't have to listen to the people like Dave Portnoy.
Yeah, the smash.
And the only reason I listen to the people of Dave Portnoy is I know other people listen to the people like Dave Portnoy, and I have to warn them against people like Dave Portnoy.
It's been one of those things in 2020.
Dave Portnoy is having his true first lesson in the market.
Yeah, last 3 weeks, I'm sure he
Listen,
has
that
been.
lesson is taught to all of us.
Yep.
That lesson is taught to all of us. All of us have been there and done that. We've made the mistakes. The difference is we own up to it. We own up. If I have a bad call, I'm going to own up to it.
Absolutely. Two more that we got to get to, and then Frank's got a couple of charts here as well. Matt, Chevron, Exxon. I think that we've probably got to hit. If you got any of those, obviously we can go there too.
Yeah, we got a couple of the energy companies, Exxon and Chevron, that are fairly important that we need to update. One did decent, one did not. Can you guys? Hey, did you guys see the raw numbers on Exxon and Chevron? Who has not seen the raw numbers on Exxon and Chevron?
I have not seen the raw numbers on Exxon and Chevron.
So Jake, Frank, Mark, you've seen the raw numbers on them?
No, I stopped following both companies.
Okay, Em?
No, I have not seen
Tim?
them.
I've seen him. Yep.
Okay, so everybody besides Tim, we got to play the game. Who made money? That's the game we're playing. Who made money? Was it Exxon Mobil? The Exxon Valdez did not make money. Or was it Chevron? I wish it was BP, then I could make a joke at their expense about the Gulf.
I'm just going to guess Chevron because the fundamentals of Chevron have been better than Exxon for a while now. I'd be a little surprised if either made money though.
No, one made money.
That does surprise me.
One had a positive EPS number.
Emily, who's your guess?
I'm gonna go Exxon.
Okay.
I'm definitely Chevron then.
I'm going to go Chevron too. I feel like no matter what I choose, I'm going to be wrong.
Yeah, I go Chevron.
You're picking an energy company. There's no winner. Yes, that's how it works. It's energy.
The price action's a lot better on Chevron. Like it's a way more, like if you just look at percentage wise above its 52-week low, like people are liking Chevron a little bit more than I'd say Exxon.
So Chevron?
Yeah.
So is Emily standing on an island?
She wins.
There's no island, Emily. You're swimming. It's the island of Lost. It's all make believe and they're dead. I'm sorry if I ruined that for anybody. Okay. It was Chevron. Chevron came in at 11 cents a share versus the expectation of 29 cents. And I'm sure there was some writing off debt that impacted these numbers on Chevron versus Exxon, because the reality is, and I didn't dive too deep into it, every other aspect of their earnings reports are identical, guys. Chevron came in at 11 cents versus 29 cent expectation. Exxon came in at negative 18 cents versus the 28 cents expectation. Revenue came in slightly under Chevron at 24.5 versus the expectation of 25.5. ExxonMobil slightly under their expectation as well. Revenue declined on Chevron 32.3% year over year. Revenue on Exxon declined 29%. These two companies are identical in terms of their actual, their raw numbers outside of Chevron. And I would have to look into it a little bit more in depth than I did this morning on Exxon and Chevron regarding why Chevron showed a positive number versus Exxon. But
the best analysis,
I don't think there's that much difference.
It's a very simple thing. I think Chevron was faster and more effective at cutting cost, but they both had to cut cost, extremely, even to come close to, getting to a break even, or Chevron with a slight profit. Chevron was just a little bit better at cutting costs. So
I have a question.
Mm-hmm.
Does anybody have interest in ExxonMobil at $30? And Mark, you can't say if it goes down further. It's went down from 140 to 30. You can't give me that. Well, if it goes down to 10 and give me deep value, You got to
Hey,
assess the 30.
Molson Coors beer from yesterday up 5%
Same.
today, bucking the market.
Yeah,
Sometimes
but you
devalue.
said you wanted another downward movement in
Well,
price
I'm
despite it
greedy
going
as
down.
hell.
Well, I get it, but you can't say
My
I want
answer is
overpriced.
no, because I'm only playing the refiners. I do not want that. My answer is I've thought this out for months and months.
Yeah.
I want a little bitty, teeny bitty oil exposure, but I don't want a whole lot. I've chosen Marathon Petroleum. As
So
my
you're more marathon. You're more.
I'm Marathon at 20. I have a naked put on Marathon at 25.
Okay, so you want some exposure.
Just a
You
little
don't
bit.
want it in the drillers. You want exposure in the refinery companies.
That's
Correct.
where I'm at. Yeah.
Okay, M.
I'll pass.
You're a no. Okay, Jake.
Oil doesn't really excite me. As an investor, no.
You're so young. And it's probably the right answer. Tim.
Not a chance.
Frank.
Nope, don't like it down here.
No way. No way.
Yeah, it's tough for me to be like, hey, let's buy Exxon or let's buy Chevron, despite everything we know about this space. And the one thing we know more than anything is if it gets uglier, guys, they will slash dividend.
Mm-hmm.
I don't think the pain's done yet.
Yeah, if I could 100% count on that dividend not getting slashed, which I don't believe you can, it would be a little different conversation. But I mean, that would be the only thing that drew me, and I'd be worried every single day that dividend was going to get slashed. So,
and maybe in 2 months from now, as we've seen how Exxon handles 30, and 2 months from now, as we've seen how CVX handles in between 60 and 70, maybe at that point you can start to see some technicals. But I don't know. I don't see
30
companies outperforming the market outside of spot analysis over the next. I was going to say a time frame. I'm just going to say forever.
Yeah. I mean, the only debate would be around the dividend and the value, but quite frankly, the PE ratio on ExxonMobil is 22 right now, Matt.
That's ridiculously high for Exxon.
Historically, that's excessive.
I would rather buy Amazon at 100 PE ratio than I would Exxon at a 22.
Even at these low levels, it's got a pretty high PE ratio for its history. I mean, it traded between like 8 and 12 for a decade,
Listen.
So you're still paying a premium, which is crazy to think about.
PE ratio is nothing unless you get some actual earnings there, buddy.
Yeah.
So no, I think it's very, very premature in the energy space right now. I don't mind Mark's call of the refineries, a little dabble, a little dip the toe in action. But oil, especially with oil clipping 30, perhaps clipping 35.
Yeah.
No.
I'm with you. Stay away. Last thing I've got, Matt, is Frank's charts, but do you have any other companies you want to hit earnings on?
No, I am done with earnings today. I am done with earnings this week. I am not going to think about earnings until at least on Monday.
Wait till the scouting report meeting. You'll be thinking about them again.
I'm not talking.
You're just optimistic. I'll give you 2 hours, though.
I have 2 hours where I don't have to talk about earnings.
Yeah, there's another big week. There's over 100 S&P companies still next week. So it's
the big names too.
We've turned the corner, but we're not at the finish line yet. We were another week till we can say, okay, now we can stop complaining nonstop about earnings. Which I'm very much looking forward to, because it's tough to find, this is a tough environment to find trades in generally. Anybody who's been on the halftime report through a few quarters, they know that, it's tough to find setups. You've got limited options, right? You've got charts getting blown up on gaps and things like that. But there's always some things floating around out there that, in my opinion, at least, are worth putting on a watch list. So are we ready to rock and roll?
Let's do it, man.
Yeah,
I think that's why Emily shows up, by the way. She can talk all she wants about Friday. She loves Frank's charts. So Frankie, I'm ready to rock and roll.
Everybody loves Frank's charts.
Everybody loves Frank.
Yeah, you're always welcome as far as I'm concerned, Em. You keep these guys in check, which is no easy task.
That's right. That's right.
So let's start off with FCX, if you don't mind, Maddie. So luckily, earnings behind us. Much like the market sold on Wednesday, nice bounce back yesterday. Kind of an inside doji developing here today. Just a retracement type of a candidate, as kind of how I'm thinking here on FCX. Could I sign anybody up for maybe playing into some upward momentum early or maybe late in the week? I don't know if, I want to make any trades on Monday morning, to be quite honest with you.
I am going to preemptively veto any vetoes that come on this pick in the scouting report meeting.
Yeah, it's clean.
No vetoes.
It looks good. And by the way, copper's still looking really good.
And copper's pullback has held up fairly nicely, and I still like the chances of copper being able to bounce off of that. We'll see if that plays out.
Can I ask you a question on FCX versus copper here?
Sure.
FCX, copper, both of them look fairly similar, but are you looking at FCX saying, okay, I'm going to play FCX, but I need copper to confirm?
It sure would make me feel a lot better. Absolutely. It would make me feel a lot better because copper will help FCX. Does it have to have it? No, but it's certainly not going to hurt it to have it. So if you're trying to play, a little extra confirmation, getting the confirmation in both copper and FCX would make a lot of sense.
Yeah, and the reason I bring that up is I really, really, really like what I'm seeing here on copper. Standard bearish retracement you're seeing here, a little wicked volatility, but to be understood given the backdrop of what's happening in the market the last few days. But look at this 304 level right here. Ding, 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 ding. I mean, it's all over that 304 mark. Give me some confirmation maybe above this little short-term trend line right here. You got this little tops right there. And then you have the horizontal one right there at about that 110 level. Let's kind of what I'm looking at here, and I would play FCX over copper.
I would too.
But what do you think about this, painting this picture here? You break the trend line, reestablish support above the trend line, then you're pretty clear on there on copper. I think at that point you're probably going to see price appreciation on FCX at that point.
Yeah, I would agree with that. I would agree with that. Right now I have that probably above yesterday's high. Wouldn't mind, a Monday, Tuesday inside candle. Yeah, I mean, I would love this to happen on like Wednesday.
So, everybody would love this. But
and one thing I like about it's not just the setup, but it's a low price stock, and so it's fairly comfortable, at least from my point of view. You can sign me up for these guys if we can get that little momentum. I like the way we built up here today, holding those moving averages. Definitely one of the things I like going into next week. How about WB?
Now listen, just last thing on copper.
Mark.
Copper is like copper and Bitcoin. I love both. Moving forward, I love copper in 2021. So any technical signal, I'm absolutely in on that.
Yeah, it seems like, pretty much everyone I talk tonight, one way or another, talk to lots of traders each week. Seems like that's the general theme, and maybe it's your positive influence, Mark.
Do you know what we need? Speaking of themes, we need an infrastructure week.
Infrastructure spending.
We just need the thing. They won't do it. They've been promising us that for 10 years. They haven't done nothing. Like literally nothing.
We just need the theme. Yeah, we just need the hope, right?
Yeah.
So how about WB, Maddie?
Webo.
So we had these guys on the report a couple of weeks ago on that pullback to the 200-day moving average. They filled up that space very nicely, probably more orderly than I expected.
What world is going on here with Webo? Why am I getting potential earnings in 2 weeks from now when earnings was a month ago?
Maybe the world is blowing up. I don't know.
That's weird. I'll have to check into that.
Let's double check. I always want to double check that because that will veto anything, right? And you don't want to wake up to Twitter, on the wrong end of that. It's never worth it.
No, I promise you, Portnoy's not front running Twitter next earnings.
he might be. He might be going the other way. I like what we've seen in price action. Obviously, these guys, relatively speaking, have been strong, bouncing off that 9 EMA here today. I think at this point, you probably have to call them a potential break above 42, 50, 55, unless you can squeeze something in there on the way back up. But a lot of positive momentum, obviously, on these guys. Not a lot of clear resistance beyond what they're currently dealing with, to my eyes at least, till we get into that 40, $45, $50, $46 range. Even that's not necessarily a huge level. So I feel like I need some breakouts. If we can get some development, this could easily turn into a cup and handle maybe a week from now, right? Where we work back into that resistance relatively slowly and break out beyond that. So I've got these guys on my breakout list personally. And anybody have anything to get me to take them off or reason to keep them on?
Would only be the earnings, and I got to dig into it a little bit more. But Matt, I've checked like 3 or 4 different sources. I think that's Thinkorswim's algorithm projecting where it should have been, but Weibo adjusted it. I've got confirmation.
It shouldn't be accurate. Weibo just reported a month ago, so
I don't think it is accurate.
The only thing I'd say, Frankie, on this one is I would have loved a handle, a trigger above 42. You got a couple wicks to concern yourself right there at about 42.50. And it's enough of data that believes the algorithms are selling there. So
agreed.
I would like a couple more days to cook here, and this to me is post-election, right?
Yeah.
But give me a couple days to cook here. Let's see if that cup and handle can form, and then let's look at that potential breakout. So I would say we're a little early on Weibo, but you're not early enough to think, okay, this needs 2-3 weeks to set up. This could be a back half of next week type trade.
Yeah, exactly. I do agree with you. I think there's enough evidence that those wicks that you have to clear them.
If it's one wick, no.
Sure, if it's one tick, but it wasn't. It was there's multiple.
Well, and it wasn't
ticks
even
there,
just consolidation here. It's the when you're looking at this, comparing those 2 wicks there. Wick up, hit about the price point, right back down. Wick up, hit the price point, right back down. So I do think you have to clear the wicks and not the base here. But yeah, I can see it back half next week.
So yeah, I'd love to see a little bit of development. I hope everything I follow waits until the back half of next week, to be honest with you. What about CADE, C-A-D, Cadence Bank Corp?
C-A-D-E?
C-A-D-E, yeah, just as in CADE. So we broke out.
Nice little bullish retracement.
Riding the lightning too.
Riding those averages right back to the old resistance, testing
cheap stock play.
Cheap, good risk to reward, easy trade.
See that one
trade to kind of prep, off of probably as simple as coming in above today's high with a stop loss below yesterday's low, hair below that rising 20. You get the breakout channel as a support zone. So definitely one of the cleaner retracements that I've seen into its old breakout channel. There were a lot of things in finance in the banks that had somewhat of this kind of vibe, especially the more regional type of banks, right? Not the big nationals, but the regional type of banks. I thought this one offered the cleanest prep on a trade, good risk to reward, should be relatively easy to manage. Again, cheap. I don't know what this says about me, but I prefer things that are cheap next week if I'm doing anything. I like the low price, and maybe it just makes me feel a little bit better because I am kind of a wimp about that stuff. But pretty clean trade to prep it.
And I certainly love your analysis on the daily chart here, Frankie. Looking at the intraday analysis, trying to identify, where stop loss, where trigger here is. I think you got an easy trigger above 1130. Obviously, I'm talking confirmation. Nothing. Do I have to say it again? No front running.
No front running.
Okay.
You can never say it too much. We all need to hear it. We all need to hear it. All it takes is one time.
No front running. This is not a front running condition. This is not a. Let's turn off the lights. Let's go to the half court line and see if Tim can make his first 3-point shot in his life. That's not what this is. That's not what this is. This is no front running. So when I talk 1130, I'm talking confirmation here. I like it above 1130, and I think you got a pretty clean stop loss underneath 10.9.
How in the hell did my ball skills come into
I'm
this
just in the mood.
report? All right. I'm not a great shot, no doubt about it, but I think I've made a few 3-pointers in my life.
You won once when I let you.
All right. It's not my best game. Anyway, I like it here, Frank. Nice little bullish retracement.
I think you should get, I don't care what it is, find your company in finance. They got beat up extra hard this week. If you get post-election signals, I would have a finance trade out there for next week, post-election, if you get that signal.
Okay.
Fair enough. There's some interesting ones out there. Some are real.
Cadence Bank Corp is as good as any, right?
So yeah, they were the cleanest one, and to me at least, because I looked at a lot of them. I've got a big list of those regional type of banks. So a lot of them are stock plays, a lot of the regional banks, not all of them, but a lot of them aren't particularly great with their options, but it doesn't have to be. Next one, this one a little different. What about EXAS, Maddie? Exact Sciences. Now, these are a biotech company.
And which one?
EXAS. It's a little biotech company, big pop up on earnings, just retracing, maybe need a little bit of time to cook, but whenever I see some nice momentum like that, and I know this is a Noah type of trade, I know I'll get a nice reaction out of Noah a little later, but I always like to keep an eye on these things that have these big pops into these pullbacks. You got to be picky, right? Again, you got to wait for your signal, but whenever you see that, I think it's worth putting on a watch list personally.
Mm-hmm.
Yeah, I can see it, Frankie. Snapback retracement off of positive earnings. Those wicks give me concern.
Oh, this is.
And I know it's market activity and craziness.
Yeah,
and
this
all
is a
that.
wild ride, and I have no objection. But with as wild as it is, and it being in the biotech space, with anybody saying, you know what, nah, it's not for me. I just thought it was in an interesting place, and worth taking a peek at. And I know when I talk to Noah, he's going to get me
the momentum traders are going to get excited, and you were looking for a reaction. Do it again. I'll give you Noah's reaction.
There you go. Can we look at EXAS real quick?
Ooh.
Ooh.
Yep, there will be the Noah ooh. It wasn't a very good a good impersonation, Matt, I gotta say, but it was the effort the effort that counted there. So maybe a couple more. I got to bring up in honor of our old friend Christian, Coach Christian, Crocs on a little bit of a pullback going on right now.
I have to.
You have to. And Christian, I hope you're watching. For a long time, every time I bring up Crocs, Christian would say,
Christian vetoed,
and he wouldn't say it nicely either. But somewhere along the line, I did convert him at least to Crocs stock, and probably not the Crocs shoes. Although I've never seen Christian in person, so I cannot guarantee that. This might need a little bit of development, but they've been one of the stronger stocks in the market. There's really no disputing that. They've got some old all-time highs at $75 from back in the day, but not any historic resistance on top of them. So maybe does need some time to cook, but I wanted to bring them up in honor of Christian, if nothing else.
It is almost market proof right now, the way Crocs has been running. It's been such a
impressive.
It literally is not trading with any of the themes. It's just running.
Who knew?
It's just running.
Who knew? A pandemic, Crocs and jeans. Who knew?
Crocs here. Yeah, we'll have to get Christian's reaction. I'm pretty sure I know what it is, though. But the chart's clean. You can't argue the chart.
I'm not going to say what I was about to say. It was one of those moments where I'm like, no, just
no,
suck that one back down.
Just walk slowly backwards on that one.
Walk it back.
You can't see me, but I'm doing the Michael Jackson moonwalk right now.
There you go.
Can you moonwalk in Crocs? I mean,
I'm moonwalking right now. No, you couldn't.
There are all sorts of Crocs.
You'd lose your Crocs.
Listen, that may be true. It may not. It's not verified. What about BX, Maddie, a Blackstone Group?
Well, Blackstone.
Test and support, selling into it, potential.
You got
breakdown
the ooh for me on that one. Nice little bear support break there.
Yeah, I mean, we've held up right so far, so support hasn't broke, and you don't break until you break, but not inspiring a heck of a lot of confidence. Pretty clean, at least from a breakdown perspective, I thought. Still, I was kind of surprised, and a lot. Well, I wasn't really all that surprised with all the running to the downside. It was hard to find a lot of clean bearish setups because they kind of, the charts have been chopped up, right? But
there's support there. I mean,
that's a clean, that's a clean one in my personal opinion. We could, dance on that for a little while, see if, because the longer we, let's give these buyers a chance. Hey, it's support, right? I'm not selling it at support. You guys aren't selling it at support. But if support breaks, well, that's
different story.
Potentially a different story. So I thought that one was an interesting one. And this one's also interesting. And this is going to need some development, and it could easily be taken out as early as Monday. But that's NSC, Maddie. One more. These guys broke down out of a, out of a topping pattern here, are now retracing into that old support zone. They've done it very strong, right? So I think it's very important that we, get some signals before we get too terribly excited. But as far as the placement goes, testing that old support as new resistance, the old kiss goodbye type of pattern. If I see some selling development early in next week, these guys could be something that I'd be interested on the bearish list.
Mm-hmm. Mm-hmm.
So, and I got a few more for the reports, but I think those were, for the most part, some of my favorite ones.
Dude, I love it. And we always look forward to going through your charts on a weekly basis here on our Fridays. By the way, if you're halftime crew out there, you're watching it, everybody just give a big thank you to Coach Frank for doing the good work there. And if you're looking for charts, by the way, Frank, and I say this every time you're here, and I mean it every time you're here as well, does such a fantastic job on Twitter at Tackle Trading. If you are a Twitter user, and go and follow him. He posts charts every day, data every day. It's just a fantastic follow, Frankie.
Appreciate it. Yeah, you're always welcome to come join us at Tackle Trading over on Twitter.
All right, guys, action-packed show, a lot that we've broken down here and kind of talked about, but quite frankly, they still got the black hole on Tuesday that everybody's going to be waiting on, anticipating.
Yeah, that's a big one.
It's going to be interesting to watch that. We're going to be back every day next week with our daily show as we kind of start to move into wrapping up for the week here. Let's get final thoughts from everybody, and let's start with you, Jake, our guest here today. Final thoughts, just what are you looking at? What's on your mind? How are you, approaching the market? What message would you want to give to students out there?
I would say don't get caught up in the volatility next week. I've only traded one other election and it was very exciting, but don't get too excited, right? I remember last time it was 5% limit down overnight. I understand last time was a little bit more an unexpected event, or let's say unforecasted event occurred. But there was quite a bit of volatility, right? So I would say, sometimes it's not bad to be in cash. Sometimes it's not bad to sit on your hands. But like I mentioned earlier in the chat, there's smaller products these days, 24-hour ETFs. You got some micros as well as the minis to play. So just don't get caught up into it.
Mm-hmm,
That's it.
mm-hmm. And Emily, you next there. How are you? Final thoughts from you? How are you approaching it? What's on your mind?
Same sentiments as Jake, and obviously with the election, go out and exercise your right to vote. I know we're going to talk about it a little bit more next week, but it's the weekend, it's Halloween weekend, so it's pretty much just going to be a chill weekend for me, just looking for those opportunities after post-election to see if I'm going to get into anything long-term, but for now it's just sitting on my hands.
Marky, you're up next.
I mean, I think we're all on the relative same page, right? Like, you asked me yesterday, I was like, I'm not going to do anything the next few days. And usually I'm a like sell into volatility kind of guy. It's what I love. I'm waiting for the puzzle pieces to get in place. We got a huge puzzle piece with tech earnings today. And while market reaction is bad, I think it is going to be a huge fueler to a future bullish theme at some point. But that theme has to merge, right? Maybe that theme is post-election. Maybe we get a blue sweep. Maybe we get a contested election. That is the next huge puzzle piece, and it's a massive one. And I would rather give up a few percentage gains because I had to be fixated on picking a short-term bottom. I'd rather have that information. Like, I'd rather sell the puts and enter things when the VIX is in the low 30s or the high 20s again, which is going to happen if the election is not contested. So that is a huge piece. Have a plan for that. And I think most of us are just going to be a little bit patient until then.
Frankie?
Yeah, I mean, don't chase. I'm very much like Mark. This is there's far more likely I'd get in trouble by pushing my luck than get lucky by pushing my luck going into the election. So, I really don't expect, a lot of, me to be very active going into that. I'm just kind of hoping as we come through, we simmer down and we kind of get back more technically driven, and so just don't feel like you have to do anything, right? You never have to do something. Usually we just want to, right? And I'm speaking to myself more than anybody else here from that point of view. So, follow your rules, don't feel like you have to jump in. I mean, this has been a great day traders market, but if you have been, oh, it's going, I got to, get in on the action, it's been pretty easy to let things get out of hand. So, trade smart, and you'll be fine.
Mm-hmm. Matt, final thoughts from you?
I'm just glad this week's over with.
Me too.
This is
Right,
my
and I
least
think
favorite
I'm talking
week.
to a lot of investors out there right now. No, I'm just glad this week's over with. It was a widely anticipated week. It was a week chock full of earnings, and those earnings for the most part were good, but price action was not. And I truly do believe that a lot of it is due to a lack of a theme, due to the void of the black hole that is the election. So, patience is a position. It always has been in the market. Patience is a position, and when you're looking at the market right now, it's technically challenging right now, it's fundamentally challenging right now, it's politically challenging right now. In every single capacity, it's a little challenging right now, and a lot of that is due to we are very tight against a very important election, and it's kind of like let's get that in the rearview mirror a little bit, and I do think a lot of people in the market are waiting for that, putting that in the rearview mirror so that we can start, mapping out. And I don't just mean we attack, but I'm talking the banks, the hedge funds, the institutions, other traders out there, so that we as a collective community, investing community, trading community, we can start mapping out economic projections. We can start mapping out how sectors are going to handle whatever government structure we have moving forward following Tuesday, so that we can start throwing that line out there in the water called stimulus and let all the traders just bite on that hook, even if they never do it, so that we can start mapping these projections out a little bit. And the earnings this week have been, in my opinion, more positive than they were in the first quarter, more positive than they were in the second quarter. I think when it's all said and done, this earnings season, from an EPS beat, a revenue beat, will challenge some of the better earnings quarters out there. Not overall making money. That's not what I'm talking about. Everything goes against what the projection is, and that's what I'm talking about. The beating on projections, not overall record numbers on revenue and EPS numbers. So it's going to go down in the books as one of the better earnings out there from a percentage of company beating the expectation. That is typically in the mid 60s to low 70s. We're going to be over that. Revenues are typically in the 50%. We're going to be over that. And I think once we remove some of the cloud from the market, we can start forward projecting a little bit easier. I think companies, and it works the same way in the market as it works with companies. Some companies have a hard time projecting out where they're going to be in 3 months from now. That's why they can't give guidance. That's why they talk about Twitter, the uncertainty of the election, other companies, the uncertainty of COVID, and that's why they can't do their forward guidance. The same thing works as traders. It's hard to map out technically when you have a major thing that has an expiration date to it. I really want to take the expiration date. I was going to say the expiration date is Tuesday. It might obviously go longer than Tuesday because there's a lot of projections that we don't have a clear winner on Tuesday night. Now, do I think society will pretty much know? Yeah, I do, but there'll be some court battles most likely. So let's see that play out. But once we do remove that uncertainty, I think it's a little bit clearer perspective on where we project this market, both from a bullish or a bearish perspective. But outside of that, I am glad the week is done. I am excited to get into the scouting report meeting with the coaches after the market close, and we'll probably be a little light on scouting reports this week. I think not only with the earnings, but obviously with the election next week as well. And so a lot of the reports for me anyways this week, because we will have picks in the report. FCX is going to be in the report. Mm-hmm. For me, a lot of it is, okay, are we going to scale in on that trigger and then add to the position once the uncertainty is removed? Or do you wait till post Tuesday to start being a little bit more aggressive? And again, that's up to the individual, but those are the questions I'm having.
Yeah, there will be setups, and we definitely will have picks. It's going to be a fun conversation with the coaches to talk about rankings in these markets and kind of getting everybody prepared over the weekend and whatnot. I know it's not going to be an easy call on some of these rankings, so I always look forward to those conversations. And guys, we've got our full programming the way that we always do.
Well,
Go ahead, Matt.
and what I love about the scan report very quickly, and we had a little bit in the chat, James and I were talking about the technical scenarios a little bit. What I love about that scatter report meeting and having Em and Jake and Frank and Tyler and Noah and Gino and the coaches of tackle trading is we all have different perspectives technically. I'm not a big believer in secondary indicators, the MACD, the stochastics. I think they are widely misused. Other coaches worship at the altar of secondary indicators. So everybody has a little bit of a different perspective. And that's what I love about the reports is that everybody approaches that with their perspective. And, there's many times when Mark will come on and be like, no, I veto. And everybody's like, what are you talking about? What are you vetoing? That is a perfect analogy. He's like, listen, the weekly chart has a random moving average that I'm concerned about. And I'm like, I don't care about you. But that's the beauty of the report is that we're not all perfect. We all have flaws in our analysis. And I just love the fact that we have this collection of coaches that see things a little bit differently, have different perspectives, that have been around the market for many, 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 many years, if not decades now. And they bring that perspective to those reports on a weekly basis. And what you guys see in the reports is after a 3-hour, sometimes difficult conversations of all of us coming to the agreements on the reports. And that's what I love about them. I work off those reports every week. As an individual, I work out those are what I work off of every single week.
Yeah, and I do also love the fact that we have different perspectives. I think it brings a lot of value to the reports and makes it a more well-rounded report. Yeah.
Listen, the pro member community of tackle trading is $97 a month. One report, and I've seen this, guys. Just one trade off of one report has paid for some of our members years and years and years of advance for what it would cost to get all of the analysis. The pro member of tackle trading, and that's why we love our pro members, and that's why they stick with us long term. We provide them great analysis, true analysis, not biased. We give them the data, we give them the information, and we give them the education to make sure that they're making the right decisions for themselves.
Mm-hmm. Mm-hmm. And by the way, if you are not yet a pro member, a standard offer we always have, there is a link in the comments below. You can sign up with a 15-day trial and get everything from over the weekend that we do, including the reports. And Mark, you have 2 shows over the weekend. You do one here in just a few minutes and then one Sunday night, right?
20 minutes. We're going to do the Mind of a Trader at the Market Bell, where we go over the commodity report live, and then when any last second trade adjustments, lots of different things, probably have some commentary, some ideas, some plans on how headed into a weekend. And then of course the Market Bell. And we're going to have, whatever information happens between now and the weekend prep class on Sunday night. When the weekend prep class happens, we will be 2 days away from the election, and we'll have whatever news happened over the weekend to go into our analysis. And that will certainly be a fascinating show this week. So, but 20 minutes, Mind of a Trader. You can find it on the calendar at tackletrading.com on the events calendar.
All right, guys, it's time for lunch for me. Wonderful show. Great job, everybody here. Emily, Jake, Frank, appreciate you guys popping in, here today on a Friday show. We are out here for today. We're out for the week. We'll be back on Monday with our live halftime report, same time, same station. And guys, have a wonderful, safe weekend, and we'll talk to you then. We're out.